video is being divided into two sections, the beginner section and the advanced section. So here's the beginner section. Many of my friends have come up to me and asked me, what is the VIX? Now the VIX, the SIBO Volatility Index, is based on a formula that samples prices in options in the SPX. What does that gibberish mean? Well, don't worry about that. What the VIX is, it's a number that goes anywhere between 9 and about 30. And when people are nervous about the market and when stuff is moving around a lot, the VIX goes higher. When people are confident in the market and nothing's really going on, the VIX moves lower. It's as simple as that. The VIX is based in Chicago at the Chicago Board Options Exchange. They're the people that produce the number. And during the trading day, the VIX formula is sampled every 15 seconds. So the VIX updates every 15 seconds during the trading day. One important thing about the VIX is you cannot trade the VIX directly. You need to use some other means of trading the VIX. Now, the most direct means people use to trade the VIX is through VIX futures. Now, VIX futures expire every 30 days. And so each future represents the market's best guess of where the VIX will be when that future expires. So, for example, the DEES future right now is trading around 15. That means that through all market participants, the best guess is the VIX will be 15 on December expiration, which is about a month from now. The public and normal retail customers generally will trade the VIX through exchange-traded products. Exchange-traded products have become popular in the last few years and have taken the place of mutual funds in many cases as an easy way for retail investors to get access to the market. And this is true with VIX products as well. Now, VIX exchange-traded products are generally based around a sampling of the VIX 30 days out. So if you think of VIX futures, one expires every 30 days, but any single VIX future only represents 30 days out for one day. Then the next day it represents 29 days out, etc. So the way VIX exchange-traded products work is they take two futures whose average expiration equals out to 30 days. So, for example, tomorrow, the December future has 30 days till expiration. So, VIX exchange-traded products like VXX, UVXY, TVIX will be composed entirely of the December future tomorrow. The next day, they will be based 29/30ths of the December future and 1/30th of the next future out. That way, when you combine the two, you have average representation of 30 days out in the VIX. So it's a little complicated because of the fact that these products are based on two futures, and the mix of these futures changes every day. But it's pretty basic the way they change. Tomorrow, all products will be based solely on the December future. The next day, products will be based 29/30ths on the December future, 1/30th on the January future. The next day, 28/30ths on the December future, 2/30ths of the January future, and so on and so forth out into time. This way, VIX products represent the best view of where the VIX will be 30 days from today. Now, if you want to get into super specifics, you can dispute the accuracy of exactly what I'm saying, but that's the general principle that we're concerned with here. Is we're looking at how much the market's going to be moving around in 30 days, and generally, as I said before, the VIX is going to go higher when there's bad news or when something bad is going on, and it's going to go lower when the market is just kind of sputtering around, just kind of moving forward, slowly rallying. Indeed, unlike stocks, with a stock, what you're most concerned about as a risk manager is that violent down move, the market crashing. With the VIX, what you're most concerned with is that violent up move. Something bad happens to the market and the VIX spikes upward. All right, so this concludes the beginner part of the show for today. Now let's move on to the more advanced part of the show. We're noting that VVIX has moved up. It's been moving up lately. Let's take a quick look at VVIX. VVIX, of course, is it's going to represent option buying and selling, the level of implied volatility in VIX options, and we've seen this moving higher recently. The trend has been up, in fact, for the last 2 or 3 sessions here. Let's back out on the chart to a 20-day, and we see indeed stuff has been moving higher. Now this is in contrast to the VIX, which has pretty much just stayed the same. Let's overlay the VIX onto the VVIX chart here real quick. So let me see if I can do this right. See if we can widen this out here. Okay, so studies, compare with VIX. And as you see, whereas VVIX has moved higher, the VIX has just kind of stayed in the same area. Once again, reconfirming what many of us already knew, that VVIX is not predictive of what the VIX is going to do and doesn't really move in lockstep to the VIX. Now, some people would say, well, once the VVIX gets to 120, 140, then you're in the danger zone, and they really do move together. But we've seen a movement up in the VVIX with no movement up in the VIX. So it's an interesting period of time for this indicator, which we still don't completely understand the usefulness of. In the meantime, we stay in sharp contango coming into expiration tomorrow. The roll yield between the VIX spot and the December future is looking to come in tomorrow around 2.4 points, which is pretty much expected for expiration. I know we've had this discussion before. Last expiration stuff was uncharacteristically wide. I think it was up to almost 3 points on expiration. But here, 2.4 points seems reasonable for the VIX sharply in contango. You will notice that the relationship between the second and third months currently, that being December Jan, is over 10%. I've highlighted that before as being an interesting number because the last few months we have seen contango between month 1 and month 2. Of course, month 1 is relatively moot because these ETPs are barely based on month 1 anymore coming into expiration. This is only based like 1/30th on November and the rest on December right now. December is basically everything. But that being said, still sharp contango between these 2 months and over 10% between the next 2 months. So we are in a beautiful contango chart, as I've said before, and these products will continue to decay heavily unless we get some sort of spike here. Let's move on to take a look at VIX options for a second, and we'll see if we've got any stuff today on time and sales. I like to look at time and sales. Okay, so we see December. No, that's not even from today. That's weird. I don't even know why that's up there. Maybe I need to reload my system because it's giving me readings from days ago. Oh, here we go. So let's see. We've got December. Looks like we've got a roll here. It's a roll, but they rolled up. So they bought back their short Nov 14 puts, and they sold Ds against them. I'm assuming this is a roll here that happened 32,000 times. People came in and sold these 14 puts. The 14 puts have done well. They're going to expire in the money here, and they're rolling them both out a month and up a strike, and still collecting money here, right? Because they're doing it for a 9-cent credit to roll these out a month and up a strike. So that's it's basically the equivalent in the VIX of somebody having a buy right on, right? When you're long a stock and you sell calls to the upside against it, well, this is like the opposite in the VIX. They're essentially they're short the VIX and they're selling well, basically they're long puts. It's just kind of like an override, I should say. Maybe it's not exactly. So that's a big trade, 32,000 times. Let's see what else is going on. Let's pull up VXX. So my current position still is I am long this put spread in VXX. You might ask, why haven't I covered it? Because the VIX is down around 12. What more can I hope for than the VIX being down around 12 here? Well, it's just due to the fact that this stuff is so in contango that what I can hope for is more decay just based on the fact that the stuff is in heavy contango. Okay, now just for a quick comment on ACB. My ACB position did not work out. I did buy some shares for around the 270 area, and I ended up puking them out yesterday around the 240 area, 235, 240, something like that. I just have no more confidence in ACB. I shouldn't have been picking stocks. I'm not a good stock picker. I want to make the case to you, if you are long ACB or any of these MJ ones, why not just get long the ETP? That way, you diversify yourself a little bit. If the industry, as the industry does recover a little bit and get back on its feet, if you buy the index, you don't risk that your one company you pick is the one that doesn't make it, but the rest of the industry survives. If you buy the index, you're giving yourself a little bit more protection from an individual bankruptcy. Now, ACB's situation is pretty scary. They seem to have kind of overextended themselves financially, and they've backed off of some products. And I just like the idea of buying the index much more than buying an individual player right now. I think it makes a lot of sense. Tell me what you think, and I'm interested in what other stocks are you trading today. Let me know. Thank you for watching, and I'm interested in your commentary. What's your position in the VIX? Mine is still short here. However, it's short via this put spread, so I'm just looking for VXX to stay under 18 and move as far under 18 as we can go in the next 30 days. That way we can hopefully weather a small spike and this can expire less than 18. I think if VXX gets below 17, I may buy a few shares to hedge my position. It's currently showing me short 700 deltas, the equivalent of short 700 shares of VXX, and I think I would probably look to protect my upside a little bit by buying a few shares against this trade just to hedge a little bit if we move significantly lower from here. All right, so there you have it. Thanks for watching. Thanks. I guess one of my videos was shown in a high school class the other day, so very exciting. Thanks to Luke for that one, and we will see you again in the next one. Thanks for watching.